we have TJ Osterman, who is going to be doing a presentation for us. But before I go ahead and get started, I'm going to take the first 5 minutes or so to kind of go over some quick IRA basics and some really cool announcements that we have for really special events at Quest Trust Company. And then hopefully within that 5 minutes, we get enough people so we can go ahead and just ready start on that presentation. So I'll just breeze through this very quickly, but you remember, guys, if you have any questions throughout this quick little presentation before we get into the real content, just let us know, okay? So first, I'm going to go over who is Quest Trust Company. If you are new to Quest and you're not really sure, this is your first event that you've done with us, then let's kind of go over a little bit more about who Quest Trust Company is and whatnot. If you are a veteran, if you've been to these weekly webinars before, then just sit tight for a little bit. So basically, Quest Trust Company is the largest self-directed IRA custodian in Texas. So we allow you to utilize your retirement accounts or other people's retirement accounts and basically purchase alternative investments such as real estate, notes, private entities, a bunch of different kinds of unique strategies that are different than stocks and bonds and mutual funds and stuff like that. So we are located in Texas, but we actually have clients all over the country, about 20,000 active investors, nationwide, and also some other territories as well, that use self-directed IRAs and are clients of Quest. We have about $2 billion in assets under administration right now, not including all the liquid cash that we have available as well. And the really cool thing about Quest is that we really train our employees to really understand IRAs and how those things work with alternative investing. And we actually have about 100 and a little bit over 100 employees at the moment in all of our locations in Houston, Austin, and Dallas. But we also take the extra step, and that's really the Quest way, right? And we have about 34, and I think actually have a little bit more now, certified IRA service professionals. And basically we go take a test that gets us certified to be able to, do what we do, right? The people that really understand IRAs, they take that test with the American Banking Association, get certified, get that title. I'm actually one of the CISPs as well. So, when you are talking to Quest, whether you're a client or non-client, you're really, talking to professionals. We know what we're talking about, and, you make sure you get the best education possible. And, we have $350 million in undirected cash. So, good stuff there. But with all the knowledge that we do have, we also have to put in this disclaimer because Quest Trust Company does not provide any tax, legal, or investment advice. We are not your CPAs. We are not financial advisors. We just provide really good education, networking opportunities, and, just being able to give you the opportunity to be able to forge your own path. So we don't give any advice. So remember to seek out, these other professionals that are licensed to get this kind of advice. Make sure you're doing your due diligence on not only the investments, but also the people you're working with as well. So quickly, what is a self-directed IRA? I'm not going to spend too much time on this. Essentially, it's the same exact thing as an IRA that you would, that you've heard of, a traditional IRA, a Roth IRA, like Fidelity for some reason. But really the only difference is that instead of investing into stocks or bonds, you're investing into alternative investments like a house. So that's really it. That's really the only difference is you have this self-directed IRA at a private custodian like Quest versus a public custodian like at Fidelity. Not really picking on Fidelity. It's just a good example. But there are a lot of benefits with this as well. One being diversification. You have the option to have a bunch of these investments on the public side, again, stocks and bonds and mutual funds, but you're not as diversified as maybe you could be because you can have a traditional IRA at a public custodian and then also a self-directed IRA at a private custodian. And then you're kind of having, those investments on both the public and the private side. So then you're kind of truly going over that, spectrum, not just on one side of the coin, you covering both the public and the private side. So great for diversification. The tax savings are great. All IRAs are tax deferred entities. So any money that you put in and you grow those investments, you're not taxed on that growth. So as long as it stays in the IRA, it's all tax deferred. So, could potentially save a lot of taxes when these investments are being done in the IRA. You have social investing, and then also investing in what you know best. If you're into, real estate, if you're into alternative investing, then why not use your, retirement account for that? There's about, 7 different types of accounts that you can self-direct at Quest Trust Company. We have our personal plans, which are the ones you're probably most familiar with, the traditional IRA, the Roth IRA. We have employer plans. So, if you are self-employed, these plans can be really, really powerful for you. So we have our SEP IRA, our simple IRA, and our solo 401k. And then we have our specialty plans, which are not exactly IRAs, but they're really, really cool because you can utilize those tax-free funds with these accounts. You don't have to wait until you're 59 and a half to have this. You can actually start having those tax-free distributions now with these accounts, depending on if it's like a qualified medical or a qualified education expense. So these accounts are really helpful and really cool and can be all like self-directed the exact same way as an IRA. But altogether, these accounts can all be utilized as well together. So you can, combine different accounts for an investment, partnering these different accounts. So you have a lot of options with these types of accounts. Now, I didn't really go into detail on these accounts specifically, but if you do have questions and you want to learn more about these different types of accounts and which one's better for you, I'm going to have Nicole Bako put in our contact information so you can schedule a free consultation with an IRA specialist to get more information on these kinds of accounts. And then the investment choices are pretty endless, right? So as you can see here, we have like a lot of different ones in the real estate, private entity, and promissory note sectors. Again, this is not it. This is not the full list, but this is what we see, most often, right? So you can do things like single family, commercial property, joint ventures, trust, secured loans, mortgages, all that fun stuff. If you want to see if like there's a potential investment that you wanted to ask an IRA specialist if that's doable in an IRA, again, give us a call. I've seen some really weird stuff. So like, it'd be great stuff. But, we do offer self-directed IRAs, but, the real thing that we want to make sure that you guys have is that free quality education. We want to make sure that we always say that our best clients are educated clients, right? So we host these weekly webinars. We host self-directed IRA Saturdays every Saturday at noon. We host networking happy hours, and we have like these other big events as well. So in addition, we also have a very extensive YouTube account. This is actually something that I do personally. So I'm going to ask everybody who is here if you can go and subscribe to our YouTube channel. We do post Monday, Wednesday, Friday, a bunch of different topics about self-directed IRAs or investing with the self-directed IRA, or just some fun tips that you need to know when investing. So make sure that you subscribe. Nicole's going to put the link to that at in the chat. So again, make sure, periodically, if you, want to be up to date on all this stuff, make sure you're subscribing. But also you can see our full list of webinars. So you're here today, but this isn't all that we do. We do, again, weekly webinars. So make sure that you're checking out our event pages and start RSVPing for a bunch of different events that we have. And then also, we have our virtual networking happy hour. It's always the first and third Wednesday of every month. These are really kicking off right now. The next one, I believe, is the 3rd of February at 6:30 p.m. Central Time. So we typically get about anywhere between 60 to 70 people on these happy hours for this event. And, spots are kind of running out. So, these are very helpful. We have actually seen a lot of people utilize this and get deals out of it. So make sure you're RSVPing to this happy hour. The next one is February 3rd. So make sure you don't miss it. All right. And then very quickly, before I hand it off to TJ, we have a quick flash sale that we just did yesterday. So guys, if you are interested in setting up an IRA or want to open up an account, if you use the code QCL bundle, this is like our biggest bundle that we've ever done. You open up an account, you get these 3 free things. You get a ticket to QuestCon Live Private Lending Edition. So we have a paid event that we put on every quarter, QuestCon Live, to replace our big Quest Expo. For those who have been to our Quest Expo, you know that it's huge and it's informative and it's great for education and networking alike. We have QuestCon Live, which is that online, that has been ridiculously successful the last like 3 times that we've done it. And this one is specifically for private lending. So if you're interested in private lending or anything about it, you know, you get that free ticket if you open up an account. But not only that, you get the full recording of the entire event so your hand's not cramping from notes. And you get our case studies ebook that we have developed about these really cool creative case studies of what people have done in their IRAs. So make sure you email IRAspecialist@questtrust.com and use the promo code QCL bundle. And again, you know, if you have questions at all, you can always contact an IRA specialist. Give us a call at 855-FUN-IRAs, or you can chat live with us directly on our website at questtrust.com. We have IRA specialists that man that. So, you know, if you don't want to call anybody and you just want to chat with an IRA specialist, you're more than welcome to use our chat feature. But without further ado, make sure I kind of breeze by that. TJ actually has a wonderful presentation for us that I'm really excited about seeing. And TJ, I think you can go ahead and share your screen, and really excited about this, guys. I hope you're excited too. It's a secret trend to help your investing future. So I'm actually really excited to see this. So TJ, you can take it away and I'll come back at the end. Oh, you're muted.
Okay. Hello. Everybody can hear me now? All right. Well, first off, I wanted to thank Quest Trust for putting this on. I always really appreciate everything that Quest does. I've been to their live events. I've done some of these, and I always think it's quality. And I am also a huge advocate of education, research, especially with the new types of alternative investments that are coming out there. I also wanted to thank all of our frontline people that are out there fighting this COVID, all the people that have passed in our country. You know, I want to give our hearts out to that as well. And excited to move on and show you guys what we have to do here. So there I am, husband, father of 2 girls. I've been a real estate investor for 20 years. I'm an impact investor. I'm a CEO of MWMfund.com. Which is a mortgage note and real estate fund. I'm co-founder of Paperstack.com, which is a trading desk, a fully digital trading desk. And one of the big goals and mandates that we have is to really drive capital into the underserved parts of the country using technology as a vehicle to do so. So I want to move on to the first slide. All right. So what's past is prologue. Now, we're at an exciting time in our lives, right? Which we've really never been in before. You know, as investors, all we can really do is look for trends, right? And similarities at different times and different generations to kind of formulate somewhat of what we should be doing going forward, right? So we need to extrapolate stuff from the past to kind of look at where things are heading. Well, since we've never been in this type of situation with the pandemic before, it's been a question that has been on my mind as being a manager of the fund and actively investing for a long time. All right. So, you know, how do we invest with some confidence and to be able to protect our capital? Like I said, I've been asking this question ever since we started this pandemic. And so I've been searching for a trend, right? Because that's what we all look at. And I really think it's important to attach yourself to and have faith in something, and then use that as your strength or kind of guide, right, with where direction you want to go. Now, the following story, along with the graphs and slides, are here to hopefully inform you guys, entertain you, add some value. And I didn't give a disclosure. This is for educational purposes only, okay? This is me giving a point of view of something that I believe will be a trend that's happening, okay? So hopefully, at the end of this, this will help you ask other kinds of questions, right? And maybe give you some confidence that you didn't have before, and you know, and confidence that we as a country, we've kind of been in this situation before, which I'll touch on just a little bit, and how we've kind of come out of that and what that looks like, right? So I really finally think I found something of value that most of you will find interesting. It's a parallel to our current economic, social, political, etc. situation. It happened a long time ago. Now, we need to go back to the Gilded Age, right? 1870 to 1900, right? That's a long time ago, right? So the culture of this Gilded Age is kind of a lost history and culture. No one's fault. Hey, people lose things all the time. But the trends here are so striking that I think this is so worth taking notice to. So for you that are trying to speculate on a real estate investment, or a new business, what do you invest in? What's going to be happening? What's the policy going to look like in 1 to 5 to 10 years, right? So now this is all newly compiled statistical evidence, right? It provides a really good look at the last 125 years and kind of gives an insight of what we can expect possibly going forward. All right, so this guy right here, he's an 1830s French aristocrat. And I got to take you back before the Gilded Age to kind of start my story out right here. Back in 1830, this guy, Alexis de Tocqueville, I hope I didn't slaughter that name, but he went to America to better understand the American prison system. He did this for the French government. And at the time, our democracy was only like 50 years old, right? We were like the big experiment, Europe checking us out, see what's been going on. The guy was unreal with notes. He was meticulous. He did not only just reported on the prison, but everything about the country, what was going on, conversations and everything. And he kind of summarized that, this is a group of people that were eager to share so everyone can prosper, a lot of values, a lot of morals he saw, mutual agreements. Now what I want to do is remember that date of 1830, right? Now, a good question to ask, what if this guy was to fast forward 50 years? What might he see become of America, right? So I want to give you some insight into our current situation, right? To kind of give a juxtapose. And let's look at how we're doing, right, as a country. On the broad question of prosperity, things could hardly be better, right? Considerable advances in communication, transportation, living standards, they have brought to almost all Americans a degree of wealth, material wealth, unmatched in our history, right? Increasing educational opportunities have made strides toward leveling the playing field for all of us, right? So, America's rugged individuals struggle against the loss of identity, autonomy, and the mastery as are subsumed into the anonymous labor of hyper-consolidated corporate machines and forced to pool meager wages to make ends meet. Corporate monopolies have hoarded profits and gained unrivaled economic influence through a wave of mergers. Corporations with their outsized power took away all the workers' rights. We're not seeing any bargaining power for all these people. They're getting paid less, and wealth is going up, but they're getting paid less, right? And capitalists cite their responsibility to shareholders and market forces to just justify keeping the payload to them, right? And we're starting to see a little transition here. So corporations search at home, abroad for even more vulnerable populations to employ at even lower wages. We've all heard about outsourcing. So in important ways, life is much improved, right, at the bottom of the American society, making some commentators, optimistic. Things are going to get better, guys. But the brutal reality of structural inequality condemns many people of color, of whatever, to intergenerational poverty. In some ways, the situation of Black America is worsening. The situation of middle class America is eroding. Soaring private debt has become a common buttress, holding up lagging incomes, basically paying them less but giving them credit cards and debt. The economic power of corporations basically has in turn become political power. Now, while profits mount too, corporations creatively always evade financial and ethical responsibility to the public systems that allowed them to flourish, right? Commercial giants successfully fend off, feeble efforts to regulate them by buying off politicians and parties. You hear about all these lobbyist groups. Politicians collect exorbitant amounts of money from wealthy donors, which they use to win elections. Interest groups are relentlessly pressuring elected officials to prop up corporate agendas and just to get out of the way, to tell everybody to get out of the way of the free market, right? So Thus, vast swaths of an economy go mostly unregulated, right? And the system as a whole occasionally careens out of control. Our GDP soars, wildlife is disappearing though, fuel sources and raw materials are exploited indiscriminately, affluence threatens lives. As an after-the-fact attempt at carrying out, civic duty, many Americans wealthiest, they do donate, right, to large philanthropic situations, but usually at the exchange of, okay, put my name on the building or immortalize my name upon a facade, right? So industry leaders are often idolized for rising from the humble backgrounds by employing the true grit of entrepreneurship. And, they become social and cultural icons despite morally questionable actions. So the message to ordinary Americans is that, look, you can go to rags to riches, right? If you do whatever it takes. And that's even actually doing whatever it takes by putting your morals and your ethics on the line, right? So, right now we're living a very individualism has kind of taken off, right? It barely masks selfishness, an air of superiority that's going on with everybody. The philosophy of maximum self-reliance is common. The pursuit of unfettered self-interest is considered a laudable ethic to live by. Now, a drift towards self-centeredness in private life is matched in the public square. Public debates are characterized not by deliberation on differing ideas, but demonizing those on the opposite side. We're not working together here, right? The result is a nation more fragmented along economic, ideological, racial, ethical lines. I think we all can kind of agree there. It's quite polarized. More and more, dominated by leaders who prove shrewdest at the game of divide and conquer, right, will win. The inevitable result is a political gridlock and a hobbled public sector. Now, decaying infrastructure, inadequate essential services, and outmoded public programs are a national embarrassment. Neither seems capable of addressing Americans' problems. And many voters turn to third parties for better options. You're seeing libertarians' leanings, socialism gaining adherence. America's democratic institutions are strained under the burden of this polarization. Now, in addition, right, to this economic and political malaise, social and cultural disconnect are at an all-time high. They're rising, right? In America, transformed by the rapid forward march of technology, new communication and transportation, it's really disconnected and reconnect people in countless ways. We're rearranging identities, beliefs, value systems. Now, some optimistically tout the breaking of barriers and narrowing distances between people, while many others experience loneliness, isolation, and as traditional social structures kind of give way, right? So the increasingly global information age is where you can get news from every corner of the earth. This explosion of all this information really threatens us. It threatens to overwhelm the individual trying to make sense of it all. Now, new ideas in science, philosophy, and religion upend traditional touchstones, right, at an astonishing pace. Even free press, right, is reliability is in question, right? That's a critical component of any democratic system, right? Now, as a drive for profit, right, overpowers a responsibility to the truth, a fevered pace of life is often blamed for widespread stress and anxiety. You can see this in the demand for stimulants of all kinds. You can see this in how much we're being medicated, right? And because we're all trying to hurry up to keep up and strive and get ahead. Now, the nation to most seems no longer recognizable, right? Brought up in an earlier age, turning to many old Americans, they're turning to nostalgia, right, for a bygone era. Some Americans have reacted to these forms by dislocation, by turning on their perceived adversaries in an increasingly cutthroat social and economic contest of just zero sum. I win and you lose. So, the number of immigrants entering the country illegally soars. Meanwhile, ideologically motivated terrorists ignite a backlash against all immigrants, including crackdowns by law enforcement, nationwide raids sponsored by attorney general, and civil liberty threats. In more significant numbers than ever before, Americans seem to have stopped believing that we are all in this together, almost as often as we're turning on one another. Americans are responding to uncertainty and insecurity by turning to self-destructive behaviors and beliefs. Whether the response is lashing out, turning inward, tuning out, or just giving up, Americans are becoming increasingly paralyzed by disagreement, disillusionment, despair. Still others lament that the country is on the wrong track morally and culturally. All right, well, I kind of want to disclose something. I told you a lie in the beginning of reading that whole little story, though. Though it would appear that you have just heard a kind of a summary of where we are at currently in our situation. But the preceding measure, the preceding balance sheet I just read about of what's been going on is a historically accurate portrait of this country in another era. It was at the opening of the 20th century, just 50 years after Tocqueville wrote this stirring depiction of a thriving democracy back in 1830. You see, the US in 1870, 1880, and 1890 was almost lockstep with today. When I read this, I was just blown away. So now we have some history to go off, right? What kind of questions, now that you know this, should you start asking? To give you some more insight into where we're going. Now I'm going to show you some charts and graphs to kind of back up what I've been talking about the Gilded Era and how closely it resembles where we're at now, and then onward to where we think we're going. So it's going to show you the parallels of kind of what's going on. Now, the good news is that the US has been here before, right? The Gilded Age, like I just said. And we did successfully pull ourselves out of the distress, right? So I want to kind of go right now into some quick points and graphs about some of these similarities, which is striking. So I think the story, Newt, I would agree that this is a good, that was a good summary of our current situation, right? Gilded Age enthusiasm was fueled not merely by the performance of the overall economy, but also by the new technologies it's produced, right? We think technology, we think like computers. Well, back then it was steel, right? Signature product of the late 19th century was steel. It transformed American life. It reshaped everything from transportation. You had the railroads, architecture, skyscrapers, medicine, surgical instruments, the consumer goods things like pianos, all this type of stuff. Now, the same holds true in recent decades, only this time, the key transformative product is the silicone chip and the digital economy it powers, right? So the first Gilded Age was marked by intense partisanship, gridlock in presidential elections decided by razor-thin margins. Kind of sounds familiar, right? 2 presidential contests in the Gilded Age saw the candidate who lost the popular vote with the election by virtue of the Electoral College, just as George Bush and Donald Trump did in 2000 and 2016, respectively. Now, all these charts you're going to see, they broadly conform to a common, you're going to see a hump-like pattern, like you see here, right? That I'll show you. And how all these charts were developed are basically based after asking these 4 questions, right? And it's really, have things been deteriorating or improving in these 4 areas, right? Number 1, greater or lesser economic equality. Number 2, greater or less compromise in politics, greater or less equality in our country, and greater or less altruism in cultural values. Now, a growing swell over half a century ago of greater social trust, equality, bipartisanship, and civic do-gooding peaking around the 1960s, followed by a marked and steady decline in all these criteria in the subsequent 50 years. So this is a culture, whoops, let me get back to there. There we go. All right. So this culture, the Gilded Age, is kind of a lost history in culture, right? No one's fault that it got lost, like I was saying. But the trends are striking. And I think it matters as you're an investor, because you're running due diligence. You're trying to basically predict or guess where we could be going. And this right here, how closely it follows things is amazing. So if you kind of look at this trend line, this is what I call the graph. And if you want any of the sources that I got all this from, at the end of this, please ask me and I can get you all the sources to cite all this work. So you look at here, this is the I individualism. This is back in the Gilded Age. This is the I curve. As it goes up, you start to see more more is coming together as a country up into the 1960s. And then what started to happen, you had Kennedy in the 1960s, going to the moon. And then what happened is started to go downhill. Nixon got into office. I'm not saying that's bad or good on either side. It's just this is what the trends started happening. Economics, politics, society, culture all started going back down to more I individualism and not sharing a collective sense of profits and whatever there may be out there for people and opportunity. So here's something that you can see. We've been, so you can see kind of we've been growing steadily around 2% year after year, right? GDP. But things really started to slow after the 1970s and still till today. You know, the GDP to hit that 2% mark in growth is, we really haven't been making that. And I know that's been the claim, but we really haven't been doing a lot of it or getting close to it, that's for sure. So here's what you kind of see is, you know, a residential floor space and housing in the United States over 120 years. You can kind of see how big our houses are getting. There's been more residential houses available, and you start to see a little bit of a click downturn of kind of where we're at now with this low inventory, right? Now, just some other things that are going on. You can kind of see it's an amazing growth, right? Vehicles per 1,000 population. You see from 1900 to 2020. Now, okay, here you go. You can see these growths, right, in the automobile trends. So for me, looking at this stuff, you kind of think about Tesla, right? So what would I have done if I could kind of foresee this trend going upwards at such a great pace? This is my point about what we're going through here, right? Past is always tells you kind of where you're going, right? So we kind of want to say, I wish I kind of knew where we were headed back in these days. So maybe I could get ahead of it and add value to this current market condition to take advantage of it. Now, what kind of services and businesses flourished because of this back then is another thing that you want to, you know, look at. You know, infant deaths, they've gone down. So a longevity of life has gone down because of you know, increase in medicine. So overall, life expectancy in years has been increasing due to you know, medicine. So we're living longer. We better save more money. Now, here's a really interesting source, right? Probably would have been a good time to get into financing on education. Oh wait, they already did that, right? Because as you can kind of see here, high school graduates, which is awesome, it's gone up this much, right? But what do high school graduates usually do? They go to college, right? And how do you pay for college? Well, it's gotten quite expensive, so you take out loans for that. Now, here's 25 to 29-year-old people with bachelor's degrees gone up, right? And as you can kind of see the trends of how much tuition has gone up, it kind of follows lockstep with this. And what's sad is that you get together with the finance companies and say, this is what we're doing. We got all these people that need education. Can you finance them? And it's put our country in a real tough situation for the younger generation. That is for sure. So what I want to kind of do here is show a share of national income received by the top 1%. So what this is kind of showing you is that, once again, as you can kind of see, there is this hump-like U-curve, inverted U-curve going on. Everything is running lockstep, right? You can kind of see back here, you know, the share of the wealthy, they've owned a lot more, 20%, you know, 18% of the wealth. As it's gotten up to the 1960s, less of that, more was equally distributed amongst everybody. And you can kind of see our downturn at where we're at right now. Now, okay, so what you're looking at here is a share of the total wealth held by the top 1% of families, right? Same thing. You can see this trend line and it comes up and down. So really what I'm trying to do by showing you this is that it's cementing in the fact that there is a significant trend here that you need to look at going forward, right? That it isn't really widely talked about. Now you're looking at fraction of children earning more than their parents. Basically what this is saying is intergenerational wealth, right? How much do you give to, because majority of people are wealthy because they're able to get it from their parents, and their parents are able to buy homes to be able to create this wealth, right? So you can kind of see the same thing. And now look at how much it's actually gone down. Now, this is a very interesting type of chart here. You can kind of see, the amount of crude per 100,000 population on people just going off the charts. And then you look at, popularity of unions increasing. And it's kind of funny because it's running lockstep, right? And with what's going on. So as people did not have unions to look out for them, I'm not saying unions are good or not. I'm just reading the facts here that unions aren't looking out for these workers. Amazon has just spoken about unionization again. All right, so you have to start to think about this. Is this the world we're going to start living in again with more unions? Are employees going to start demanding more money and get unions to do it? Because as you could see, when unions started to increase, wealth, people started to get more, employment, and they started their amount of money that they made was better. And then obviously, as unions decreased, the amount of money that people were making, the general public, decreased as well with that. So here's income taxes, which is our always favorite, right? You can kind of see our income taxes. Marginal tax for federal income tax rates, same type of trend line as you see it going up and going down again. So you see when obviously everything was in that we mentality, working as a country together, taxes were higher. I know we all don't want to pay taxes, and there's other ways besides fiscal policy to change things. I'm just showing you some relations that are eerily similar. And then what you're looking at here is corporate tax, right? We all know this, right? Basically no corporate tax. And as you kind of went up, another similar trend line, and you're starting to see it, it really kind of maintained through 90 to 2010, and now it's starting to go down again. But we'll see what the new administration's going to do, but I perceive that trend line probably stagnating right now. Now, the state tax is, we all know this one is big. It's a estate tax, right? Back in the day, even people like big tycoons, back Rockefellers, believed that the amount of money that they make in their family could be taxed more, should be taxed more. Could you imagine somebody saying that in today's day and age? But that's how these capitalists thought back in the day, and you can kind of see it going up. Where the exemption, and then it's time to go down, and you can kind of see where we're at now, and when Trump lowered that, which look, my corporate taxes went down. All I'm saying is that it's an interesting scenario and how it runs lockstep. So you look at this, which is very interesting. You see the Social Security tax continuing upwards, right? But the welfare benefits start falling off the cliff. So really what happened was, this is, Social Security is the glorified tax. That continues to go up, but generally that's only collected from people that are employed, right? Or something like that, right? So what does this do? If the Social Security amount continues to go up, right? Payment in, but then if you are somebody that cannot work, let's just say, welfare payments lower, they can't survive, and it's just causing a mass inequality and a huge separation for people in our country, right? Regulation, you can kind of see where it's gone. It's gone up into the 60s, and here it is again, back down into where we are now, to where we've never been more polarized, separated in our country, and the numbers don't lie. Here's minimum wage. I know this is a big talk about everybody. Minimum wage, that's not gonna help. I'm not here to judge that. All I'm showing you is that what the minimum wage has done and how it's actually stagnated, right? Up and down, yet costs and inflation are going up. What happens if inflation goes up a lot in the next couple of years, right? What's gonna happen to all these people? The overall economic equality, right? And here it is. It shows the, you can see down here, it's just extreme inequality. If you go back and look at the Gilded Age, the mansions they built, it was extreme wealth, very similar to today. And you can kind of see, obviously, the dip with the Great Depression, but we quickly started to rise up in the Great Convergence. That's what they call this, the Great Convergence, and then downwards to the Great Divergence as a country, right, into inequality. The top 1%, there's only a few people that can actually get opportunities into different opportunities and things like that. So, well, I have to tell you, an antidote emerged, right, to these robber baron industrialists back in there, these social Darwinists and anti-corporate populists of the Gilded Age, in form of the progressive movement. Now, these ideals attracted reformers within both main parties. There were such things as called Reformist Republicans or progressive Republicans, right? So the progressive era, which I believe we are in this, starting to grow into this era now, this was a period of widespread social activism, political reform across the United States of America. It spanned the 1890s to the 1920s. Now, by the start of the 20th century, a middle class had developed that was weary of both the business elite and the radical political movements of farmers and laborers in the Midwest and the West. Now, the progressives argued that the need for government regulation of business practices to ensure competition and free enterprise. So if we are headed in that direction, what does this tell you as a business owner? Is there going to be more regulation? Are there things that I need to look out for to position myself, to hedge against any risk? What do I need to be looking 5, 10, 15 years down the line right now when I'm investing in things, if I'm seeing this type of stuff? What type of questions is this making you ask? It's just a different look at the same thing, right? It's just a different perception on different stuff. So, the Gilded Age, the progressive era was an age of not only, growing income equality, but of volunteering, right? You're starting to see this now with a lot more impact investing, socially responsible funds. And I just love to see this. You see big, huge capitalists saying corporations nowadays aren't just under that Milton Friedman of profit over everything, shareholders first, because it's just unsustainable. And I think you saw that with the IWI curve. It was unsustainable for so long until something had to break. And unfortunately, it was kind of this COVID thing. I think that was kind of the transitions, which is really interesting, right? We all know who this is. It's taking over the world, considered to be a monopoly. So back in that day, in that progressive era, President Wilson used tariffs, currency, and antitrust laws to prime the pump, get the economy working again. Sound familiar, right? Trump with, the tariffs increase things, and our economy has never been better in certain aspects, right? But now you start to see the antitrust laws, Facebook, Twitter, they're trying to encourage more competition by limiting the marketing power to these folks. And we're going to see how that plays out. But that's always something really closely to follow. I'm speculating in the progressive era, just as today, there's going to be an increase in regulation, right? Many of today's regulatory bodies were put in place during this progressive era. FDA, FTC. In the 1913, the Federal Reserve, who was put in place as kind of a good governance over the monetary, over the cash, over the policies, right? So the U.S. Congress established 3 key objectives for monetary policy in the Fed Reserve, right? They're really kind of be a governing body. They want to maximize employment, stabilizing prices, and moderate long-term interest rates. They never really said anything about being the buyer of last resort, right? Well, as of today's, you could go to the Fed's website and look, how much are they buying from the public markets? What does this do, right? When you see actually what is holding up these markets. Well, the Fed is buying equities, ETFs, bonds from these bigger companies like Facebook, where they're sitting on $1 trillion in cash that could be put back out into the marketplace in research and development, but they're selling their bonds and giving them money, and they're spending it back for buybacks, stock buybacks and stuff. So you had a lot of things going on there with the Fed. If anybody wants to reach out more about where you could find that directly, information from the Fed, it's definitely something to watch because it's a direct source of what's happening. So, you had a lot of political and social reforms during the progressive era. As a country, we grappled with problems caused by industrialization, urbanization. There was a middle class reform movement. I'm starting to see things like this, hear things as you're actively on, monitoring companies that are doing a good. How have they performed in the last few few years in your portfolio. And they've actually outperformed a lot of the major companies that don't have that mandate of profit and purpose, right? So, people in the progressive era supported the government taking a greater role in addressing such issues as, the control of big business and welfare to the public. Once again, I'm not agreeing with any sides. I'm just showing you what the progressive era was like and how close we are to that pivot to where we could be going, right? So, and it also spurred something called the efficiency movement. And as you'll see here, it's very, very similar to kind of what we're in. It was a major movement in the United States, right? And overseas in the early 20th century. What it did is identified and eliminate waste in all areas of the economy and society, and to develop and implement best practices. Doesn't this seem kind of like what we're doing now? So the concept of, personal improvement went up, economical, social improvement. Everybody's trying to be the guru out there, right? The quest for efficiency promised effective dynamic management rewarded by growth. So as a result of the influence, an early proponent of something like this was called Taylorism, which I'm not going to get into, but you can research more if you want to. It's a very interesting thing. So here's where we kind of come to the end, right? United States, I think, is posed for a second progressive era. What do you think? Is the United States poised for a second progressive era? You can kind of see the very similarities. I know that it's a broad stroke to paint, but it's entirely possible, right? But as any good historian will tell you, history follows no script. Nothing is inevitable, right? So what questions should we, as investors, investment managers, people that own companies, small businesses, what should we be asking ourselves when it comes to providing purpose and profit? What should we be asking ourselves when we want to invest in a company, right? What should we be looking at not only to help our country, but also help grow our wealth, right? You need to kind of see where trends are moving so you can at least grab onto something and forecast out what you think is happening, and then price in your risk up front that way and balance your portfolio. Balancing your portfolio in the past used to mean just buy different baskets of equities, right? So balancing your portfolio might now mean, balance it with profit and purpose, not just different basket of equities. As I talk to investors all the time, their kids are taking over their portfolio and they want to get into things that are really here to help with profit and purpose, right? Now, what's going to happen? We don't know. What I want you to do is basically come away from this and maybe you get a different idea. It's going to spur you to ask different questions. It's going to kind of help you maybe get in front of this, add some value, maybe look at something that's going to add value to this trend to help you make money, to help your families, to help the fellow American out, right? Now, why isn't this more spoken about? Well, it's not in the main headlines. It's not too sexy, right? So me being the geek when it comes to research, and I just love this. I love everything about it. I love researching and trying to find trends so I can properly put money in places that are going to not only help our country, but help our investors grow money, right? So without further ado, that's it. My name is, TJ Osterman. Like I said, I'm with Money with Meaning Fund. And like I said, I've been an impact investor for about 9 years now since we started with MWM Fund. And basically MWM Fund, moneywithmeaningfund.com, is a real estate and investing, mortgage note investing company, right? We manage, our mandate to manage is profit and purpose. We put both of those together. We try to reach out, to help people save their homes. And one of the biggest mandates we have for 21 is to help with this affordable housing crisis and to let everybody know out there that you don't need to just build more homes to help with affordable housing, okay? There is a whole bunch of homes out there that are $150,000 and below that what I call are stuck in debt purgatory because no banks want to take over them and catch the hot potato and release them to the general public because they're lower value. But there are so many out there, and I think each one of us has a great opportunity, and I'm taking it on as a personal responsibility to help with this affordable housing. So, everybody in this country can start to flourish, maybe start thinking about being an entrepreneur again. You ain't doing any of that unless you got a home, okay? So with that being said, I thank everyone for tuning in. I hope it didn't bore people too much. I wanted to bring something that was a little bit different than usual, but it's well worth looking into these trends. And I hope it'll give you a good maybe look into what we're looking at, so you can position your portfolio correctly, position yourself, your family, everybody, so we can all kind of flourish and move past this crazy world we're living in now with this COVID stuff. So God bless, and thank you.
Thank you so much, TJ. That was great. I really like to see the different trends. I know I really like the the history portion, just kind of seeing, because a lot of the time we just kind of repeat history, right? So very good stuff. So we have a couple of questions, but guys, if you do have more questions about the presentation or more for TJ, just let us know in the Q&A and we can just answer those live right here, right now. So make sure you're utilizing that Q&A. So the first thing that we did get is what is your based on what you've seen, what is your best piece of advice for the future based on these trends?
Best advice for the future would be, for me, is manage with, look at that dual mandate of impact and income. Start looking at, having that purpose mentality, because if you're looking to raise money to invest in things, you're going to be able to find a different group of people that might give you money that are looking at this, and look at the millennial generation and what they're actually investing in, because pretty soon they're the ones that are going to be possibly loaning you the money on your future investments. So and do your due diligence and stuff. But I'm super bullish on impact investing and socially responsible investing, and do that. Both of these can work together. So really start looking at companies like that do this type of stuff.
Good deal. So then the next one too is, so with COVID, we saw things like the CARES Act, right? That we definitely get a lot of questions here at Quest Trust Company about the CARES Act. Based on what you're seeing, have you heard of any, legislation that would be upcoming that might also affect this kind of stuff?
Well, I can tell you this, that obviously with the new with the new party in place, I'm going to see, I believe, another reemergence of the hardest hit fund type of situation, where that was kind of put off in the previous, but I think more opportunities like that are going to be available for people. So if you're an investor that invests in affordable housing, and somebody comes a hardship, you can have obviously more tools at your disposal to help that person continuously pay on your mortgage note, right? But yeah, I mean, that's really what I'm starting to think is going to start to come back, and we'll see. I know 2021 there is no talk of stopping with any sort of stimulus, because I don't know how we would at this point stop stimulus, right? And so I believe it's just going to continue on, whether you like it or not.
Definitely. So we have another question here from Guillermo. And his question is, based on your trends, would you conclude that estate taxes will be going up in the future?
Probably, because you see it seems like everything now that the last administration was doing is they're trying to dismantle everything or put pauses on it. I just got word that I manage a Regulation A+ fund, is what MWM fund did, and that's what and they had some different things that Trump put in the plan of raising it to 75 million. Regulation CF was going to be raised to 5 million. They just put that on pause. So estate tax is going up. I probably think so. But maybe there'll be a supplement for that, right? Maybe it's not going to be a fiscal type of answer to that. Maybe something else. This is what I'm saying, that is nowadays we're very nimble. We can think of maybe different ways to make that to where the estate tax doesn't have to go through the roof, but I think it's going to.
Oh, well, good deal. Okay, so we have another one from Bob here. How could a person with $100,000 to passively invest, how could your company and them work together, if that's the case?
Just call me.
What's your phone number so I can put it in the chat?
Yep, 407 378-6868 and just hit extension 4. As well as go to mwmfund.com. I have a big button there that says schedule some time with me. I love talking to people out there. I have people calling me every single day wondering, how we can work together with different things. I'm not doing everything, right? I'm doing one thing and I'm trying to do it as best as possible, but more people bringing different stuff. I feel as this togetherness starts to happen, we're going to have more opportunities. So I'm more than welcome, even if you don't invest in MWM Fund, to go over deals or ideas and talk about this stuff, because we're going to see a change, and I think we all need to be in it together. And we do that by networking and coming together as a country.
Totally agree. Totally agree. Well, that's kind of all we have as far as questions, unless, guys, this is your last chance to ask those questions for TJ. Otherwise, we'll probably be able to sign off soon. So guys, I really hope you enjoyed the presentation today. I definitely learned a lot. This is definitely something I was very interested in watching, especially with seeing the different trends. Make sure that you give TJ a call. Make sure you check out his website, but also make sure you're scheduling consultations with an IRA specialist as well. If you see in the chat box, Nicole Bako had actually, put in that information for you to schedule that one-on-one consultation. So take what you learned from this presentation and apply it to your, your investment portfolio. Oh, looks like we do have one more question.
All right.
Jeff asks, is it possible to get a PDF of your slides?
Yeah, I can send them all. What I'll do is, what's the best way to share this off?
So probably what would be best would be if I put your email in the thing, and then people will just email you if they want it.
Awesome. I would love to. And any other research materials, I'm always coming across news to all you research geeks out there like me. I'd love to share all the stuff. And I hope you pay it forward to me too, because people come to me with great stuff. My email would be tj@mwmfund.com.
So tj@mwmfund.com.
Yep, moneywithmeaningfund.com. Yep, tj@mwmfund.com.
Guys, so make sure that if you do want these slides, if you want to see these trends and have them just as a reference, make sure you email TJ to get that stuff. And also don't forget to share information that, as well. Because, we're all just trying to share information for one another so we can all be better, right?
Yeah.
Other than that, I think that we are ready to go to lunch. I know I'm definitely ready to go to lunch. What about you, TJ?
I'm going to pass out. Yeah, no, I am ready to go to lunch.
All right. So guys, I hope you enjoyed the presentation. Thank you, TJ, so much for this wonderful presentation. And, schedule those consultations, buy those QuestCon tickets, go to those networking happy hours. And guys, we will see you in the next webinar. All right. Bye, TJ.
Bye-bye. Thank you.
Thank you.
All done? Yeah.
I think so. I think we're all good. Thank you
All
so
right.
much. That was a great presentation. I appreciate it.
Yeah, absolutely. Thank you guys. Great to talk to everybody. Be safe. And
You too.
reach out if you need anything. Please.
Awesome. Thanks so much. Have a great afternoon.
Thank you. Bye-bye.
All right.